All right, what's going on, guys? It's Andrew Ironmonger from the Emerald Group here at ERA American Real Estate. I had a situation happen a couple of days ago that I wanted to talk about. I've got a client that came in, Master Sergeant in the military, talking about using her VA loan. So she's been in the military anywhere from 12 to 18 years, most likely. And she thought she could use her VA loan one time. That's it. Like one shot, that's it, and then it's gone. And this actually happens a lot in our buyer's consultations. So it's something I kind of want to talk to you guys about. About 80% of my business is military. So we get this a lot. And out of those 1 out of 5 that don't know, we have no idea how many of those 4 out of 5 didn't know, and that they only learned during our education session, our buyer's consult. So give everybody like a 30-second window or so to come on in if they want to watch us live. I'll give you a little backstory on me. I'm prior military. I spent 8 years in the Air Force under Special Operations Command, kicking people out of planes, doing airdrops and refueling helos in flight on the infamous MC-130P. So I was under the same impressions that so many people were, or are, I guess, that you can only use it once, or that, you know, once you use it, you lose it, all that good stuff. And I just want to kind of educate you guys. So in case you guys haven't done a buyer's consultation with us before, that you'll get that information. Keep in mind, we do the buyer's consults completely free. Even if you're not planning on buying for 5 years, come on in and get some information to learn how to start accumulating wealth through real estate and doing all of that, because you're wasting your BAH when you're renting. That's terrible. You just might as well just throw it in the garbage. At least when you purchase, the payment's lower than what a rental would be, as well as you're building equity. You're putting it into something. Sure, you're paying a bank a little bit, but your payment's still lower than a rental. Our rental prices out here on the Emerald Coast are outrageous. So let's go ahead and dive right into it. We've got $453,000. Hopefully you guys can hear me. $453,100 of entitlement. You have this all the time. Now, this doesn't mean this is what you're limited to. You could still go above this, but you will pay 25% on any dollar above this. So let me give you an example. Let's say you're military, you just got orders here. You decide, I'm done with the rental game. I'm going to start building some equity. I'm going to go live, let's say in Navarre, you buy a $200,000 home, right? You now have $253,100 in entitlement. So what this means for you is, if you decide, okay, great, I'm going to do zero down as a down payment, but if you decide in a year, hey, I'm in a bad neighborhood, I don't like it here, hey, I don't want to live in Navarre anymore, I want to live in Crestview because Crestview is amazing. But yeah, if you decide anything, let's say a year down the road, you can rent this property out and you still have $253,100 to go with zero down. You could still buy above this. You could buy a $260,000 home. You're just going to pay 25% of whatever $6,900 is. I'm not going to try to do that math. But so, hey, great. You rent this one out for $1,400 a month, and your payment is $1,200. You're making $200 a month, and you decide to upgrade and buy a $250,000 home. You're still paying $0 on your down payment. Now, there's still closing costs to consider, but we can get the seller to pay for that. So this is important. And here's the best part. That $200,000 home, let's say you get orders somewhere and you're going to go to the infamous Cannon. For instance, I know a lot of the Hurlburt guys are going over there. And you don't want this house anymore. You just don't want to deal with a rental, or maybe you've put some money into the house, or you just have equity. And you're like, cool, my $200,000 home is now worth $230,000. I want to pull my 30 grand out, or whatever it equates to. Then great, you swipe this, it goes off of your plate, and that $200,000 gets tacked on to whatever's left. So right now we only have $3,100 if you kept the one in Crestview. But if you sell them both, your entire entitlement comes back. So now you can buy up to $453,100 without a down payment in Cannon or in North Carolina or wherever you're going next. And it keeps getting reset every single time you sell the property. The only thing to think about is your VA funding fee. This is that percentage that they tack on. Your first purchase is at 2.15%. This is that one where if you bought a $200,000 home, your loan looks like $204,300. I hope that math is correct. On your second purchase, this $250,000 home, it will go to 3.30. This is, of course, assuming that you're not a disabled veteran If you're at least 10%, I believe it's 10% disabled, you will pay 0 funding fee on that. So anyway, just wanted to let you guys know that it does reset. You can keep buying multiple homes. You can have 3, 4, 5 homes on this thing. In fact, you can go above it, pay 25%. That may still be better than doing a conventional investor loan. Just depending, work with your real estate professional to figure out what is the best move for you. But this is very important because, you know, this particular client, we hear it at least once a month that somebody didn't know. She could have been building wealth this entire time, and she was just misinformed. She didn't have the knowledge. You know, had she just come in and talked about it, then everything would be good. So see if are there any questions or anything on there? Anybody even watching? Probably not. But if you guys have any questions, I would love for you guys to put it in the comment section down below or shoot me a private message. There's a lot more to this, but this is just the baseline. Wanted you guys to know. Use your VA loan. The rates are incredible, and particularly in our area, it's better than renting. You're going to get the same amount of house for less dollars. So that's all I've got. Thanks, Steph, for holding the camera. Hopefully next time we'll figure out the computer version and go from there. So thanks.